Welcome to the Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place. Here to challenge you to think out of the box, your hosts, Felipe Mejia and Diego Corzo.
Diego, what's up, dude? We have a really cool story today. We have Trista, who's farming over, how many acres did she say? I can't even remember anymore.
It's like one 800 and one 300. It's freaking crazy.
It's a huge amount of land. But she's investing in, she's got a car wash, she's got long-term rentals, she's got a whole business going on. This is a fun podcast because she goes into like 30,000 foot view of each one of those. So make sure you listen to the end so that you can hear all of the aspects of her business.
Yeah, one of the things that I really liked is how she shares the story of when she went to college. Her and her mom were able to buy 3 houses so that she could house hack, and then sold them and then bought back in her city. So that strategy was really cool.
I agree 100%. Like taking the finances around with you, and since real estate moves slow, like you're able to do that. Something that I did as well. I bought in college. I bought a 6 unit, and then I came back to Nashville and bought here. So it's an awesome story. I can't wait to you guys hear it. Let's get started. What's up, guys? Welcome to the Rat Race to 5 podcast. That was funny because I always do the clap to start the podcast, but Diego did it this time, and it was flawless. Trista, welcome to the show. Tell us a little bit about yourself, who you are, what you do, and all that fun stuff.
Hey, thanks guys for having me. My name is Trista Brown Priest, and I am from Southwest Kansas. My family and I feed cattle here, so our main source of income and our job is to farm. But we also do a little bit of real estate investing. We've got 5 long-term rentals here in our local area, as well as our small hometown car wash. But in the last 6 months or so since I've joined Rat Race, I've really been focused on passive investing and have done quite a few syndications.
Very cool. Well, that's a lot to unpack, so we're definitely going to get into that. But like you said before the podcast started, let's take it back to the beginning, because I'm sure you didn't grow up thinking, I can't wait to join Rat Race and get passive income. Most people do. No, I'm just kidding. But tell us about who you were in high school and what you did, what activities you were in, and what were you involved in?
Yeah, so our business, we feed cattle to from about 800 pounds or 600 pounds until they're ready to be made into meat. And it's been my family's company. It was started by my grandpa in 1978. So working here at the feed yard has always been a big part of my life. We worked here. I mean, I've worked here ever since I could work. But I'm from a really small town. So I graduated with 19 kids in my class. And in a town that small, you don't have to be good at anything to do everything. So my best friend and I were president of every club. We were captain of every sports team. So there really weren't cliques in our high school. It was just the 19 of us hanging out.
Yeah.
Wow.
So I wonder if I would have still been an eagle or a penguin in a class of 19, Diego.
Probably.
we still had both categories, but it was just a little bit easier to tell who was who.
It was easier to tell. That's so funny.
Well, I mean, when you're basically brothers and sisters with your whole class, you know who's a penguin pretty early on.
For those that are not listening, or for those who don't know what that is, Diego, 30 seconds, tell the penguin story.
All right. So basically, when Felipe was in school, they would put, if you wouldn't excel as fast, the teacher would label the kids as a penguin because it couldn't fly, right? And then the people that would get good grades from that perspective, they were the eagles. So then Felipe would one day ask me, hey Diego, do you ever think that we would have been friends in high school? And I told him no, but not in a sarcastic or funny way. I just told him we wouldn't be in the same classes because he was a penguin in school and I was an eagle. So, but it works out.
Friend.
It works out.
Trista, what a terrible friend. Okay, so you come from a small high school, 19 people. What does everyone do after that? Like I always wonder in those small towns, what do people do after high school if they don't go to college, or how was it in your town?
Yeah, I'd say about half of us went to college afterwards. A handful went to trade schools, but then the others, a lot of us started working when we were young, and they just kept working afterwards. Got it. In Southwest Kansas, we have a huge Hispanic population, and so quite a few of them, we started with 22, I think. And then, after quinceañera, sometimes they don't come back. So yeah, quite a few just started their real life after high school.
That's interesting. Southwest Kansas, there's a large Latino population. Is it for labor? Is it what is the large population doing there?
Yeah, mostly this region is really well known for agriculture, and so there's a lot. I guess agriculture probably started bringing everybody here, and then just stayed because all of our restaurants are Mexican restaurants, or so we're very familiar with the culture.
Oh, that's awesome. Okay, so high school, 19, you got out. What happened next? College? What was the next steps for Trista?
Well, so that's kind of where the joke starts. So when I was 18, I was never coming back to this terrible place, right? Like, I'm going to go live in some city and do some amazing job. And joke was on me. So I went to college and graduated in 2008 and applied and interviewed for jobs. Well, I didn't interview. I applied for jobs for 4 months and couldn't even get an interview in that time.
Right.
But luckily, there was a place here for me. So I came back and realized that it wasn't actually so terrible. And I've been here ever since.
Nice.
Really?
Well,
what did you go to school for?
I did a brief, I did go to grad school a few years after undergrad. So I have an MBA, but then I came right back after MBA as well.
Got it.
Cool. How have you applied some of the MBA stuff on the agriculture business with your family?
I wish that I would have been a little more choosy about which MBA program I went into. I went to Kansas State and I love the school, no complaints, but we did a lot of like Harvard Business Review, like Fortune 500 type studying. And let's be honest, nobody in that class is going to run a Fortune 500 company. I wish I would have picked like a small or family business type MBA program. I still use all that. Still, need to learn how to read financial statements and all that kind of stuff. But I think a better program would have been a different program would have been a better fit for me.
Got it.
So what happened after college? Just like you go to college, went back, got your MBA, you came back to your little small town. What happens next?
So I guess since this is a real estate deal, I should have talked about this. While I was in college in 2006, I started house hacking before that was a thing. So I'm definitely not some genius or anything, but just kind of happened into it. I bought a house. I was in a sorority. I bought a house outside the house and always had roommates that helped pay for things. So we ended up, by the time I graduated college, my mom is my partner on the real estate, and she and I owned 3 properties there in our college town.
Nice.
And then I came home. I had met my husband while I was in grad school, came home. A few years later, we started having kids and didn't make it up to my college town all that often anymore. And so we ended up selling those and buying houses, long-term rentals here in our local market. I wish I would have known more about long distance investing at the time, because there's a lot more appreciation in our college market than there is here. But live and learn. What are you going to do? It's too late now.
Yeah. So question, as you were in college, what was that conversation, or like, when did you realize that you can be like, hey mom, let's partner up on a deal so that I can live with roommates for free? Like, what was that conversation?
I don't know. I guess it was something that my cousins had done when they were in school. So it wasn't something completely foreign to us, like as a family. And then I didn't work full time when I was in school or anything like that. So it was just a way to not have to ask my parents for money all the time, to be honest.
Yeah, that's
cool.
It. That's cool, because there's a lot of people that, like, I wish that I knew about that when I went to FSU, so that I could just ask my mom or my dad and be like, hey, let's buy a house, let me rent it out to roommates, let's sell it afterwards, or whatever, right? But just to get that opportunity, because it would have appreciated, we might have been able to depreciate the house too and all this other stuff. But yeah, because I feel like that is
the whole family. It could have helped you with cash flow, and it would have helped them with taxes and all the other benefits.
Exactly. Well, cool. So then you sold those properties, you went back, and then you repurposed that money into more long-term rentals.
Yeah, and we actually 1031 exchanged those. That was my first time doing any of those. But we sold 3 there, and we were able to buy 6 here because the houses are just cheaper here.
Got it. And what was that cash flow difference, or like what did those investments, those 6, help you attain from that perspective?
Yeah, we that was one thing I was really wanting to get out of Rat Race, and I have gotten it at the beginning, was just trying to evaluate, how well our portfolio is performing. We have never taken any cash flow out of the business. So just making sure that it's not kind of on the back burner and that we're not just losing money and not even knowing about it. So that's one thing I've really had to focus on this last year, is making sure that I'm running my numbers correctly and that we are making the best decisions.
Yeah, that's really important. Do you take time, like monthly or something, or quarterly, to analyze those, like either the bank statements or whatever?
We do, yeah. Our accounting team that works here at the feed yard also does our real estate business, and so we run monthly financials to evaluate that.
Cool.
That's cool. Tell me, I'm curious a little bit more about your farm. What's going on there? How does that work? I don't think we get a lot of real estate investors that also have a farm or that do that as a business. Can you kind of give us a 30,000 foot view of how that works?
Sure. So we're a custom cattle feeding business, and so that means we take care of other people's cattle.
Okay.
We're permitted by the state to have up to 51,000 cattle here at our facility.
And how many do you have?
We have about 43,000 here today.
You have 43,000 cattle.
Yeah. So we.
Wow.
Yeah, and like I said, very few of those are actually owned by us. We're kind of, we're the feed and the caretakers. So some of our customers are people that have cow calves, like they birth the calves at their own farm and then they feed them out with us. And some people buy them, already weaned from their moms and then feed them out the rest of the way. So I've talked a little bit about that on my Instagram. So cattle feeding is obviously our main gig, but
Sure.
It can also be kind of a short-term investment. It is very risky. And so that's why I like real estate to balance us out. But, they're only here for 4 to 6 months. So you put a little equity in, and then in 4 to 6 months, hopefully you earn money on that investment.
Interesting. How does somebody earn money on buying cattle? Can you give us that little business rundown?
Sure. It's actually, once you understand how real estate works, I feel like it's very similar, because the feed yard, our business, will finance the purchase of those cattle. We'll finance 78%. So if an animal costs $1,000, we'll finance 780 of that. So you put in your $220. We'll finance the feed. So you don't get any bill. I mean, you can get bills, but you don't have to pay the bills until that animal goes to the packing plant. And then the packing plant will pay you $1,300 for that animal, and you'll get your 22% of that as well. And I can't do math off the top of my head, so I'm not sure what that percent return would be. But you settle up with us, we'd pay the bill, and then you get your equity plus whatever you made.
Oh, very cool.
Yeah.
And then how do you keep up with 43,000 cows? Like, how do you know whose is whose? Are they getting like a staple on their ear?
This is why I should have gone, so you guys could see in the background.
That would have been so cool.
So they're all in pins, and they're pinned by owner. So we and some owners have many pins, but that way they're all in cohesive groups. And so we definitely don't do it by ourselves. We have about 55 employees here.
Oh, okay, for sure.
Cool. Question: what was that transition from you from going to single family homes, right, to investing into syndications? What made you think about that?
So as I got into looking at the numbers of our long-term rentals, I realized that our return on equity is just not what I was wanting, or not what we were hoping for. And so like I have enough jobs. I don't feel like I need more things to do, and I'm not terribly great at being a landlord. So let's outsource that and have somebody that's a professional that's really good at being a landlord, and let's let them do it.
Right. That makes perfect sense. A lot of people don't realize that, like, you don't have to be a landlord to be involved in real estate. Like, people kind of put those one by one, but being a real estate investor and being a property manager is two completely different jobs. So if you do both, you're automatically getting into two jobs. So I quickly realized the same thing. Like, I'm not here to be a professional property manager. I'm here to be a professional real estate investor. So I need to start creating those systems. It took me like 2 or 3 years to kind of figure that out. I'm glad you figured it out sooner. Can you give us a little insight into what syndications or how you're doing it, what you can tell us about those for those listeners?
Okay, sure. The first thing I did was I read the Hands-Off Investor, the book Hands-Off Investor by Brian Burke, I believe his last name, which is a Bigger Pockets book. But it was a really good introduction into knowing at least what the terms were, because it's like so many other jobs where if you don't know the jargon, they know that you're that you don't know what you're doing.
Yeah.
And so just started talking to other people who I thought might have done syndications before. And like we had on the call Daniel Del Real a couple of weeks ago, and his advice and all the advice is kind of the same. Find someone that you can really trust and invest with that person, regardless of what aspect of syndications that they're doing. So the first few I did were all multifamily value add. So they're buying apartment complexes, fixing them up, renting them for hire, and then 3 to 7 year time commitments on those. And then this year we just signed paperwork yesterday to do an ATM syndication. So once you start learning about this, there's a syndication for anything. But the one that I'm looking at right now is you buy an ATM machine, they set it up for you somewhere, and then like 70 days after you send them your money, they start sending you cash flow back. Because all the syndications that we did, the multifamilies all do cost segregations. So we're going to have tons of tax loss, passive tax loss. And so now I'm looking for passive tax income that those losses can cover up.
Now, where are you finding
I hope that made sense. I said a lot of things there in a really weird order.
Yeah, I'll have Diego dig into the details about those in a second. But I guess my last question before I pass it on to Diego is, where are you finding these opportunities?
I started just Googling. And then I went with people, going back to find someone you trust and stick with them. I obviously don't know these people, but I started looking for people that have a lot to lose. So somebody that this is their entire job, and if they get taken, then they're going to lose their whole livelihoods. People like that where they're going to fight for it because they've got a lot on the line.
Makes sense.
Got it. And on those indications, I know that you can be a sophisticated investor or an accredited investor, but can you explain what an accredited investor is?
Sure. And I guess not an expert, but my understanding is that there's 2 ways to be an accredited investor. You make over $200,000 a year, or you have a net worth of over $1 million.
Yes. So yes.
Not including your primary home.
Not including your primary home. Yeah. So you have to show that you make at least $250,000 for the last 2 years, and then the net worth not including your home. So you're 100% correct on that one. But yeah, so whenever you do invest into those kinds of deals, you do have to either show that you're an accredited investor or have some kind of relationship to show that you're a sophisticated investor, which just means that you have some kind of investment expertise. So that's cool. So then all of these syndications, the idea for you is that you want to invest into them, and then 3 to 7 years down the road, you will either get your investment back as they refinance, or you're still having some passive returns from that, correct?
Yep, absolutely. So when I run our fire net worth, that's basically our net worth except without any of our businesses, because if everything hits the fan, I don't want to have to sell to cover our mortgage payment. We're about 50% of the way there. So my thought was, if we can get the syndication ball rolling and do 1 or 2 a year, then that would eventually that'll get us there, even without having to invest any other money in the stock market or do whatever.
That's awesome. That's
I love
awesome.
that.
Now,
So-
in talk.
No, go ahead, Diego. Go ahead.
Oh, what I was going to say is in talking about the business that you have with the car wash, what is your role in that, and what was, like, did you buy it or did you start it from scratch? And the reason why I'm asking is because, as we call this podcast, right, Rat Race to Financial Independence, there's a lot of different ways that one can create that financial independence part. And it can come from syndications, from businesses, from cows, so many different things, right? So yeah, explain to us a little bit more about the car wash model.
Okay, so the car wash in our town was already existing. It's been there about 10 years. It is a two bays of self-service and 1 small automatic. And the guy that owned it is an older guy. He's still with us, but he wanted to retire, and it had been on the market.
He used to be an old guy.
Yeah,
The way you said
he's
it.
not, but he's
He
not
used
dead.
to be an old- He gets younger. No.
Yeah. And I was afraid. He had been on the market for a while and nobody had bought it. And so I was like, well, dang, this guy is going to want to move to Texas or whatever, and he's just going to close it up, and then we're not going to have a car wash in our town. So we bought it, and there was quite a bit of deferred maintenance. So we bought it about 1.5 years ago, and we're just starting to print black ink now. We just had a lot of mechanical issues to work through for a while. But we're finally getting there. So I joke that that's my community service project more than it is actually a way to make money. But we don't have any employees there at the car wash, so I just check it myself and keep it clean. And if something breaks, then somebody from the feed yard usually has to help me, because I'm not very mechanical. Or my husband, he's good at that stuff too.
And then you said you had a laundromat as well?
Nope, just the
Okay,
long
it was a
terms
car
and
wash.
the car
Got it.
wash.
And the car wash. Got it. Okay. That's interesting, because a lot of people wonder, like, how to find those kind of like car washes, laundromat businesses. And I think a lot of times that's more word of mouth than like jumping on LoopNet or something. You know, I think a lot of times, like you said, it's just a small town. Someone knows someone that's selling, an asset like that. So syndications, the investing in that, you said the hold is 3 to 7 years, right? What is what are you potentially going to have the return on that? What is the goal with it? Kind of what's like your long-term vision? Once after 7 years, you just get your money back and do it again. Kind of give us the vision for that.
They all vary on what their expected return is, of course. Kind of my criteria is to make 7 or 8%
Okay.
during the hold period. And then, whatever happens at the end is just gravy. So either we can roll that into other syndications or pay off our house or do whatever we want there. But most of them, I think, expect like a 1.75 to a 2% or 2x return at the end of your original cash.
Got it. Okay. And then do you just plan to reinvest that? What does that look like?
I think so. I mean, that's such a long time, it feels like. So it's kind of hard to expect like where we'll be in our life in 3 years. We have 2 small kids, and so just, I guess, trying to get to fire as fast as possible, and then don't really have much of a plan afterwards.
Got it.
Got
Okay.
it. Question on regarding the single families homes that you own. Did you buy any more, or are you still at 6?
We sold 1, so we're actually at 5.
Okay, cool.
And then kind of my idea is kind of like Felipe is doing, to sell the ones that aren't cash flowing as well as they come open, because in our market, it's way more advantageous to sell as an owner occupied than it is as an investment property. So as they come open, we'll sell a couple of them, and I'm hoping to move those into short-term rentals, but I'm not terribly patient. So I'm just kind of leaving that on the back burner and not thinking about it all that much until those people move out. So
my next question actually was going to be if how they were doing so that you could either 1031 exchange into other properties or maybe take one of them and invest that money into a syndication. And if you do that 5 times, all of a sudden you're invested into 5 different ones. So which later 3 to 7 years on the road, you can get that money back, take depreciation and all this other stuff, right?
And that's one thing that I've kind of been struggling with a little bit with my mom as my partner. You know, she's kind of in a different life stage than I am. And so it's kind of hard to want to commit to, doubling long-term rentals or doing short-term rentals or whatever. Because if she says, you know what, I don't really want to do real estate anymore, I guess I need to work on an exit plan for her. Like, how would I buy her out, or would we have to just close the whole business if she decides that she doesn't want to do this with me anymore?
That she doesn't want to do it, right? So Trista, what is your now vision going forward? You want to continue to reach financial independence as soon as possible through long-term rentals and cash flow businesses. Do you have any other businesses in mind that you want to get into? If not, let's talk about one of your deals that you have right now, one of your cash flowing houses.
Okay. So we've got the feed yard and then the real estate, and then my husband and I also own a farm. That's what his primary job is. He farms the ground around the feed yard. So he's like a crop farmer and I do the cattle. So I guess 2 different kinds of farming, which probably nobody will care about, but the people that farm will know and they'll care.
How many acres do you guys have?
Let's see. The feed yard is on about 400 acres and then my husband farms about 800 acres.
Wow.
Oh my gosh. What is that even like?
That's small for our neighborhood, but that's good enough for us. Because like I said, we've got a lot of kids, so we need to keep somebody at home.
Did you say that's small?
Yeah.
Oh my gosh. I can't even imagine what 800 acres looks like.
Well, like I said, this area of the state, I mean, there's a lot of big farms around here. Like a couple of our neighbors farm like 30,000 acres.
Can you just like build whatever you want on that? Do you need like...
There's no codes in our entire county. You can just build whatever you want.
That's what I was going to ask. There's no codes.
We built our house in 2017. There's no inspections. Like they don't care what size your septic tank is. It's like, yeah, whatever, go ahead.
Wow.
That's insane.
Could you build like a little community of houses or like rental properties on your land, or is it not area like that?
I'm sure you could. I don't know who would visit there, but I mean, maybe.
Rent out an Airbnb, put a 2-bedroom, 1-bath on 800 acres Airbnb.
Yeah, there you go.
Dude, I will build houses and rent them out by the room.
I know.
To the Hispanic population.
The Hispanic population, yeah.
Yeah.
I wonder where they're staying at.
That is one tip I was going to share about the car wash business is that I've seen a huge, I didn't realize this before I bought our car wash, but there's a big difference in the demographics and how they wash their cars. So if you ever want to buy a car wash, make sure you're looking at like who lives around you and what their preferences are. I don't know if this might just be anecdotal. I don't know if there's any actual research, but Hispanic people do the self-serve and all the white people use the automatic. And so if you're in a highly Hispanic area, save your money, buy a self-serve car wash because it should be way cheaper and you'll be just as busy.
Good to know.
Yeah.
Interesting. Yeah, I could see that. I could definitely see that even here in my area, like in Antioch, the Latino community, there is a lot more self-service ones. And just taking, I don't want to say like, maybe it is. It's just kind of like taking pride in doing it yourself on your own vehicle. So I could definitely see where you're getting that knowledge.
All those gringos are lazy. They just do the automatic.
That's funny.
I love this podcast right now. Tell us about your most recent purchase, your most recent long-term rental, and kind of give us how you found it. Let's dig into the numbers a little bit.
Okay. The most recent long-term purchase we bought is actually from our contractor. It was the house that he was living at. He owned 2 houses side by side. So he lived in a small one and then he was remodeling the bigger one and he had run out of cash and needed to sell them quick. So we bought both of them for $129,000. The bigger one is a 4-bedroom and then the small one was a 2-bedroom.
Okay.
So he continued to live in the small one. And we got $650 a month rent from that. And then now we have a tenant in the bigger one, but it's a high school friend of mine. So we're getting $900 in rent from that one.
How are you funding these opportunities? you just like selling an acre from the very back of the land where no one sees?
No, it's all cash from the houses we had in my from the 1031 exchanges.
From the 1031. Right. Okay.
Because we owned those
And
long enough, we had quite a bit of equity in those, so we never had to remortgage them.
Are you
Which is good because I've
managing
really
yourself?
struggled trying to find banks that want to mortgage houses in these really small towns. Because like I
Really?
said, a lot of the houses, like we bought 2 of them at auction for 40 grand a piece. And so the bank's like, call me when you have a mortgage that isn't a waste of time.
Yeah.
They're so small.
Man.
Yeah. They would probably want to refinance like a bunch of them together versus just a $40,000 loan.
Yeah. And even then they're like, well, we don't really, that town's an hour from our headquarters. We don't deal there. So anyway,
Right.
but yeah.
Do you
Question-
self-manage? Oh, sorry. Go ahead, you.
Yep, I do.
Okay.
But we
So-
collect all of our rent on PayPal and Venmo, so that's all online. And so the only thing I really have to do is if it's open or if something breaks.
Got it. So we're recording this on March 2nd. So yesterday you were getting ping, ping, ping on Venmo.
I mean, just 5 times, so not all
Yeah.
that many.
Cool. No, that's always good. I like those pings. Regarding the auction, you mentioned the auction. What was your experience there, like to make sure that you did the due diligence on the home? Because sometimes you're buying these homes where you haven't even been able to see the inside.
Well, we were lucky that those auction houses were actually in our hometown. We're in 3 or 4 different towns around us, so all within like an hour. But those 2 were actually in our town, and so that guy was auctioning off 6 properties. We obviously knew the neighborhoods, but we went ahead and drove past them and picked like our top 2 or 3, and they did let us go inside and send inspectors. So we were able to do a little due diligence before the auction.
Oh, that's cool. And then you had to buy them cash basically, or?
We did. I think you wouldn't have to. You had to put down, I think, 10% the day of the sale, and then you had like 30 days to close.
Mm-hmm. Okay.
So you would have had to move pretty quickly, but it would have been possible to get funding during that time.
Okay.
And
Interesting.
how are you finding tenants out here in this area? You said you're self-managing.
Yeah, it's mostly word of mouth and Facebook Marketplace. But we have a huge housing shortage here. So if I have a house open, if I post it on Facebook, it's rented in within 2 hours, sight unseen.
Wow.
It's really like that.
You can build more houses then over
You need
there.
to build more houses on that
On
800
all those
acres.
800 acres.
I know.
Felipe and I just think like, boom,
We're like,
opportunity.
how many houses can we start building?
There you
Yeah.
go.
How many acres can we buy?
How many acres can we buy? That's hilarious. So tenants are easy to find. You're self-managing. Why aren't you buying more? Why into syndication versus buying more if these houses are working for you?
I mean, it's not, I guess that's where I need to learn more about the number crunching, or I am learning more about that, because like I said earlier, my goal with the syndications is to make 8% cash on cash return, or, annual return. And since we don't have any debt on these houses, we're not making 8% cash on cash on most of them. We are on a couple, but
Right.
so I think that's where I'm at. That there's people that can do this better, that can get 8% that I can't get. So either I need to get much better at this and buy more, or I just need to outsource it and do something else.
I don't think you have a wrong answer. I just think you're in a dilemma where what's the better answer, right? If opportunities come about, keep buying, and then the syndications that you're getting into. So I don't think you have a wrong answer. I was curious though, what does your husband think about all this? Because are you just like, I'm gonna buy this, syndicate that, and it sounds like he's just out there working his land.
Pretty much. I mean, there's always one of those in every couple, right? There's like the money nerd that's like super into it, and then there's the other one that's like, yeah, whatever, don't talk to me about this. So
Just
we
do what you
balance
want.
we balance each other out really well, and I get shiny object syndrome really bad, and so I'll be like, hey, what do you think about this crazy thing? And he's like, no, that's silly. Like, go back to the beginning, start again. So we work out well that way.
No, I love it, because same thing. My wife just kind of helps me with I'm just like, babe, I just create chaos, and she just kind of makes sure that we don't get thrown in jail. She just kind of makes sure that everything is good.
Yes, that's totally where we're at.
That's
That's
hilarious.
He's like, remember the goal. Like, we're not trying to do anything crazy. We're just trying to make sure that we can pay our bills if the business falls apart.
Yeah, no,
Yeah.
I totally agree.
So, question for you: if where can people find you if they have questions? Because you mentioned there's like syndications about anything, right? Like you said, ATMs and all of that stuff sounds very, very interesting. Where can people reach out to you to maybe potentially ask you more questions or just hear more about what you're doing?
Sure. I'm happy to help anybody. I spend most of my social media time on Instagram. I'm financially free farmer, and there's a period in between those three words on there. Yeah.
Cool, because I know you post there almost every day.
Man, I was doing really good during your challenge, and then I've kind of fallen off the boat.
Right.
So you need to challenge me again so that I can start making.
We got to get on it again.
That
I tell you what,
accountability.
trying to come up with things every day is exhausting. I don't know how you guys do this all the time. It's just, I don't know. I either need to lower the standards. Well, my standards aren't very high on Instagram, but anyway, yeah, I'm there. If anybody has any questions, I'm happy to help.
No, yeah,
Done.
that's awesome. That's awesome. Well, thank you very much,
Yeah,
Trista,
that's
for
awesome.
sharing your story and sharing the things that you've learned, even like within Rat Race, or how Rat Race is giving you that level of accountability, but also just sharing your journey on being a business owner and also investing in real estate as an accredited investor and all that stuff. That's really great.
Well, thank you guys for having me. I've enjoyed talking to you.
No, we
Awesome.
appreciate it. And then if anyone who's listening and they want to learn more about syndications and long-term rentals or even the business that you're in with farming, like I know that there's people that are definitely interested in like how does that even work, how to leverage that. So they'll definitely be reaching out. Honestly, Trista, thank you so much for your time.
Thank you guys. Do we get to clap again now? Like to end it?
That's a great ending.
The Rat Race to 5 podcast, where we discuss money, mindset, real estate investing, and ways to achieve financial independence. Whether you are a rookie or a veteran needing new ideas for investing or creating side hustles, you're in the right place.